Guys. So in this video, we're going to be talking about um external and internal range liquidity. So yeah, so during the last video, we did something like um buy side liquidity and sell side liquidities. So that buy side liquidity was liquidity resting above previous highs, and sell side liquidity. Sell side liquidity are liquidity resting. Okay, resting above previous lows. So that being said, let's proceed to external and internal. Okay. So external range liquidity is liquidity resting outside current structure, right? So this is a high. This thing as well is a high. So all those things are structures: high, low, high, low. These are current structures. So when a high or a low is resting outside a current structure, that high or low is called uh, external range liquidity. So this could be the major highs or the major lows. So price often targets these highs and lows before reverse, right? So let's say that we are on a bullish trend. Before price to take out this low here, price must at least take out this external range liquidity. Then before starts to drop, then take out another external range liquidity outside the structure. External range. So then we have the internal range liquidity. Internal range liquidity is simply all the liquidity residing inside a range, inside the current range or structure. So an internal range liquidity could be something like this. This low here, this low here is an internal range liquidity. Let me use another thing. Internal range. It internal range liquidity. Why is this so? Because price this low is resting inside this range. So already price is resting inside this range. So this is an internal range liquidity, right? And majority of the time, price tends to take out the internal range liquidity first, which has already occurred here, right? So this also is an internal range liquidity. Any high or low inside a range, any high or low inside a range is an internal range liquidity. So price will keep getting them run on an external range liquidity has been taken out. Once an external range liquidity has been taken out, another liquidity will be created, which is the internal range liquidity. Then the internal range liquidity being created, price will keep taking them out. Like I said on the previous video, that liquidity is the fuel of the market. So price will keep taking it out, get in it to run till the internal range to the external gets taken out. So this is the basic structure of how it actually works for from internal range to the external. A high or low resting outside a structure. This could be the major highs or the major lows. Then the internal range liquidity are the highs or lows inside the structure, not outside the structure. If it is outside the structure, then it is external. If it is inside the structure, it is internal. So that's pretty much it for external range liquidity and internal range liquidity. So there is another thing that is called liquidity sweeps. My type liquidity sweep. So liquidity sweep occurs when price briefly move beyond a level to collect liquidity before reversing. When price, let me type it out. When, when price briefly moves beyond the level to collect liquidity. For reverse. Working with the example, let's say we had a high, which is the external range liquidity, and then we had an internal range liquidity. So this is liquidity. So liquidity was resting above this point, and then this is a point of interest, a POI. It could be another block, it could be a support zone, it could be anything, right? So then we had a zone, we had liquidity, and then we had another zone here, which is the sell side liquidity or the external range liquidity. So now, for liquidity sweep to occur, whenever price does something like this, whenever price returns to this internal range liquidity, right? And then collects the liquidity here. When price briefly moves beyond a level to collect liquidity before reversing, liquidity sweep will then occur. Liquidity sweep will then what occur, and then price will then move to the external. This is typically what price does almost every time. So that's the reason why people tend to have their sales above a previous high or previous low, targeting the external range liquidity. Is basically how it works, right? So that's it for liquidity sweep. So this occurs when the bias is bearish as well, or bullish. Okay, this is bearish scenario. So on a bullish scenario, it's something like this. Then price takes out the sweep, raise the sweep, yeah, and then take out the external range liquidity. So that's basically it for liquidity sweep and external range liquidity and internal range liquidity. So we have what we call stop horns and big breakers, but we're going to be treating that in our next market and that. So I'm going to combine liquidity sweep and market structure, like since we've been talking a lot about this. So when we did something about market structure, we said that market structure has to do with structure of the market, right? Series of highs, lows, and all that. So this is basically how the market may look like, right? So all these things are break of structures. BOS. Price keeps breaking structure. And then we had internal range liquidity. So price takes it out from this zone. Right? Takes it out to break the structure. And then other things as well here are liquidity. This one here is also a liquidity. And then price takes it out, and then take out the external range liquidity, right? Because why is it external range liquidity? Because this was the external range liquidity initial. This buy side here. This sell side here was the external range liquidity, but since it has been taken out, so this is the new external range liquidity. So this is the new external range liquidity. Yeah. And then price reversed again to take out this here, which is the buy side liquidity, but it's also liquidity as itself. So this could be another key zone. So that's pretty much it for uh basal liquidity market structure and how you can combine them when it comes to your trading. So I'll try using, let me try using normal chart. Okay, I have something on this chart. Let me try another one. Okay, no, we had a zone. We had a zone. Everything here is saw a zone. Now, price was creating a higher highs, a low, a higher high, a low, a higher high, a low, a higher high. So yeah, that was break of structure occurring. So whenever price breaks structure, it returns to at least 50% of that structure and then starts going high. Likewise, this place, right? And then almost occurred there, but yeah. So here is the liquidity here. Here is the liquidity. This is the liquidity. The liquidity inside the fair value gap. So price taps it and takes out the external range liquidity right here. Is there any liquidity here? Uh, on a lower time frame, this could be the liquidity. And then price does this to take out the external. All these lows, everything here, price takes it out. Yeah, just to go higher. So it's all aligned with what I explained. It's all aligned with everything here. Internal range liquidity to the external range liquidity, from the external range liquidity to the internal range liquidity. So that's how the market tends to work, right? Market moves from the liquidity to liquidity, point of liquidity to point of liquidity. So you could backtest it, try backtesting it, and then you can see for yourself how it actually works. Stay paid.